So for more on this story, joining us in the studio is financial analyst Yannick Naud. Yannick, thanks for joining us today.
Sure.
So let's dig a little bit deeper into this. OPEC seems happy to sit on their hands for now. Why is that?
Well, I mean, the policy was set last year, which was trying to keep a market share almost at any cost, especially for the smaller member or the less wealthy member of the OPEC, and they will continue to pump oil. I think what is important today in the report is that they think that by 2020 they will need to produce 1 million less, 30.7 million barrels a day, which is 1 million less compared to today. So by doing so, it might be a signal that they will not continue to expand production as they did in the last 6 months.
At the same time, though, you say their priority is maintaining market share, but within this outlook, it says it expects its market share to actually shrink over the next 5 years. Does that signal they know it's a game they can't win?
Well, I mean, next year you will probably have Iran coming to supply the market. If you look, I think there's been some number from the government over there. They're talking about 1 million barrels a day. I don't think they will achieve 1 million barrels a day without heavy investment, but it will be a significant producer in the market for 2016. So far, we didn't see a lot of decrease of production from shale oil. I think we should be able to see this during the second half of 2016, just because we have seen much less investment, much less refinancing for the shale oil industry in the States, and slowly it should make an impact. Because if you don't invest in oil, usually, I mean, the production tends to go down pretty quickly, and it's especially the case for shale oil.
Well, let's look at how this feeds through to the wider economy. Good for us consumers, these lower oil prices, lower bills at the end of the month. But is it all positive? I mean, of course, the big oil majors are suffering job losses, such like. So overall, good or bad news?
Overall, for European consumer, it is a positive news because within your spending basket, energy is a big component, whatever it's for your automobile or for eating, and that this disposable income could be spent on other products. You can buy a new car, you can refurbish your home, and so on. So all in all, we will see more spending for European consumer, and that's a positive.
Chances are, though, your pension pot has taken a hit because most pension funds will have some investment in oil. But do you think if you're an armchair investor, it's actually a good time to go out there and buy and hold some bargain stocks in oil companies if you're in it for the long game?
Well, it depends what you think what will be the oil price. If we listen to what the CEOs of those major oil companies are telling us, whether it's Total, French Total, or Eni, or some American major, they are not very optimistic for 2016. Most of them don't expect any rebound for the oil market. Obviously, those stocks are much better value today compared to a year ago. I think it's not obvious they will be able to keep their dividend policy as they did, and a lot of shareholders of those big oil companies were investors because they were having quite a lot of dividend yield. And I think that it shouldn't be the investment process any longer.
Let's look at what is keeping oil prices down. And of course, we've got the production in the US from shale gas and a slowing growth in China.
Yes.
What other factors are likely to keep oil prices in check?
Well, in Western economy, the winter has been quite mild. I mean, it is an important factor, and so far it has a big impact. I think that we still have an oversupply of oil. Analysts estimate it's around 1.5 million barrels a day. And as long as we see this oversupply, there's very few reasons why the oil price should go up. Another factor is the fact that now the storage of oil is at all-time high in developed countries. I think there's 1 month of supplies, 3 billion barrels are stocked onshore and in vessel. And if those capacities is full, this oil have to go to the market.
Yannick, no, thank you for now. More from you later.